Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the Forex market. So the trading plan that I discussed yesterday is done well, so you could see that the downward action has happened that we discussed. This was some additional volatility on United States dollar and gold. Well, I have checked across the board, and the only event that I have found is the collapse of the Baltimore Bridge. It actually has happened precisely at the moment where we have prepared the update, so it was nighttime in the United States already. And because reaction was only on the gold market. And at this moment there were no other statistics reports or something of this kind. So it makes me think that the recent jump on the gold market that we've got, it was mostly due to this event, some external event. Later, as you could see on the gold market, those of you who trade gold, you could see that our trading stack has worked as well. So once the market has shown this upward bounce to the 618 level, it has dropped later, immediately. Almost immediately after the event has happened. So, but currently we have a few tricky moments that we have to discuss, and this mostly will be interesting for those who trade on intraday charts. On a daily chart, well, at least currently, I do not suggest that it should make impact on the daily performance. But on the intraday charts, that might be really important. So on the daily, we still have bearish context, market is going lower, and euro currency now is calling around the previous 108 lows. So we are mostly dealing with a pullback that we start discussing after market has completed downside ABCD pattern and has reached the 618 level on this upward direction, right? So now we're speaking about this pullback. And today we have more signs that that might be the compound retracement. So our initial entry in downward direction was nice. But now it seems that we could get some kind of the intraday ABCD to the upside. Here's the reasons for that. Now, for our time frame chart, take a look what we have. This was our collapse down, as we've got. Actually, that we have traded yesterday. And by this drop, market in fact has completed the target of some kind of the bread and butter sell that we have discussed yesterday. So this retracement was down to the 618 support on the whole upward action. All right, so this is minimum target on the bread and butter. By the way, I just forgot to say yesterday, but on the Great British Pound, we have the same dynamic. The overall bread and butter setup was looking even better. And since currently market in general anticipate that, well, Bank of England should start cutting rate a bit earlier than maybe even European Central Bank and even earlier than the Fed Reserve, it has a bit slightly more bearish pressure on the cable right now. And from that standpoint of view, if you see similar patterns, for example, on the euro on the cable, and you would like to go short and you have the bearish view, maybe it makes sense to consider situation on the cables, just because there the performance might be just stronger. In the same way how it was yesterday. So downward action on the cable, as you can see, was stronger than on the euro currency. But for now, if you take a look at this chart, you could see that we've got the bullish grabber. What is interesting is that actually you do not see it on the retail broker chart. But if you take a look at the euro currency futures on the Chicago Mercantile Exchange, you obviously see that we've got the grabber. Here's we have the close 108.61 while the grabber is 108.59. The Napoli predictor. So here we have the grabber, and if market will close somewhere at this point, we will get another one. These patterns suggest taking out of this top, which means that we should get a kind of the ABCD pattern here to the upside. So it means that currently we have to make the decision what to do with the shorts that we have. So because when we actually trading short as from this point, as from the highest standing levels that were in last week. And here you have to make the decision, so whether to close position partially, totally tight the stops, or do nothing, just suggesting that these patterns might fail. Because in general, with the performance that we have here, right, in the euro currency, to the downside, it's really fast acceleration to the OP. which means that the overall advantage stands in favor of the bears. And despite that, we could get here even A, B, C, D retracement later, if we will be correct in this suggestion. It doesn't cancel the further downward direction to the XOP. It just shows the deep retracement. This is first moment. Second moment, whatever patterns we are getting, it always some chance exists for failure. So that's another concern that traders right now have. So if you have the bearish position, that might be also in your mind that, who knows, maybe it's failure, I will close position, and this will be not really a good moment. So this is not a simple decision to do with the current situation. So, but if grubber starts working, we could get something of this kind. So since grubbers have the minimum target around this top, 163, so maybe it will be just minimum retracement here, right to the top, but potentially it also might be some kind of guidance to sell right to the 198 area, 618 level, and only after that market will start downward direction. Although, as I said, based on this performance, why we actually were considering taking a short position right in this level. Usually when the market shows so fast drop, it very rare shows really very significant extension, some deep retracement. Usually it is well, more or less small. In current situation it is 30%, and then just keep going lower, especially if on a daily chart we do not have the oversold or some strong support area. So from that standpoint, that was the reason why we have taken position here as well. Speaking about long position, here it is really interesting, just because market stands very close to the invalidation point. Since the long position currently could be taken only based on the grubbers, because overall context stands bearish, and you could use only the directional patterns, which is grubbers are. Here, automatically your invalidation point, your stop placement will be just below these lows. This is very small risk, but if it starts working, reward will be just enormous. So from that standpoint, I would treat this as setup with no big chance to success, at least right now, but with a huge reward and possible reward. At the same time, despite the chances on success may be small, but the risk here is also very small, because as I said, you will have to place stop somewhere in this area. So whether to take part with that or not, so you could decide by yourself. But this is all stops that we have currently that I would like to talk about. So currently we have the 3 conclusions could be made. First is about the bullish setup, bullish trading. I just have talked about this. Second, we have bearish context. It still remains valid. And once the retracement will be over in some manner, this action should continue. Third is question about the bearish positions that you have currently. So you do not have any positions currently, it makes sense to wait, either when the grubbers will be fell or if we will get the upper direction. If you have bearish position, unfortunately, you will have to decide today how to manage it. So that's all that we have currently on euro currency. So let's keep watching.